Good morning, everyone. Welcome back to Weekly Stock Market Brief. This is where I do analysis on the overall market as well as the sentiment of the market and see where things are likely heading into later next week. And we'll also do technical analysis on the Qs as well as the 7 mega cap tech, Meta, Tesla, Amazon, Google, Microsoft, Apple, and NVIDIA. To give us more clues where likely the market is heading into later next week. All right, so before we get into the technical analysis of the chart, let's take a look at just the overall data and sentiment so far. So AI sentiment data is a little bit more bearish this week. So we get these data every Wednesday. And this makes sense, right? After that last week Friday's big drop, market's a little bit more bearish due to giving back all that election pump. So currently, it does make sense that might get, we'll see if we make a new high, all-time high again, because if we don't, then that means it's going to be a daily downtrend confirming. We'll take a look at charts in a second. And Fear and Greed Index is back to greed a little bit more. Even over here, I would say it doesn't really give us an edge. If it starts to go to extreme greeds, then we'll be a little bit more cautious. But for now, just 61. It's no big deal at this moment. Earnings, nothing really going on. We had NVIDIA's earning this week, Wednesday. So that includes all the important ones that I'm looking at, and unless you're playing one of these stocks. All right, so economic data next week. Got a couple of things. So jobs definitely move the markets, and we'll see if we have two FOMC minutes here on Tuesday and Wednesday, but I'm just gonna go with the Wednesday one because they're always using on the Wednesday. So let's just say it for now. It's on Wednesday, and initial job claims. These all economic data will definitely move the market at the moment because the market is more economic driven. Because if they see any recession indicators, then the market might not like that. So, and we have holiday Thursday and half a day trading on Friday. It's gonna be a short week, and let's see what it brings us. Right now, we're pricing in only 2 cuts, so you can see one more cut here and one more cut there. So it's really not pricing any cuts, to be honest. It's just 2 cuts for the next whole year, which is very little. So I think market's a little bit on the wrong side here, a little bit. I think we might get a little bit more cuts priced in, but we'll have to see what happens in 2025, especially when we get a new president coming in. So we'll see what all those new policies might do. But at the moment, the economic data is quote unquote still strong by the Fed. So we'll see, if it ends up rolling over or not. All right. So in the chart, technical wise, no red flags at all for me at this moment. I've been talking about no red flags for forever, I think, ever since we started going up here. So as long as the trend is intact, weekly uptrend's intact, nothing really alarming at the moment. And bears have not confirmed a daily downtrend yet. So yeah, they haven't even broken this trend line, right? This trend line is like for visual guides. Bounce, 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 bounce. And we kind of just literally teetered on it for like 4 days, going sideways, ran on it. And so it's still a valid trend line. And bears haven't even really cracked through that. So it's really nothing really going on except this drop was significant. That's about it. Could have said the same thing over here on 31st, right? Like, oh, this guy's falling off. We might head lower. Next thing you know, all-time highs. Same thing over here, right? We did give back a lot of this pump, but right now we're now pretty back close to highs again. What I want to see a daily downtrend is this, right? Big enough drop. Bears do all these things all the time, right? Big enough drops. That's it. They don't really change the trend over and over. So this time, big enough drop, right? Let me see some kind of a shift in the market where you break to the new low, breaking below this Friday's low, which is the pivot low, then that's a daily downtrend confirmed from the bears. And okay, then you guys might get my attention, right? And I'll zoom out to the weekly to see where weekly support is. If we do break that pivot, but if bears can't even break that low, right, then it's just one little move. That's it, right? Nothing really confirming. So if we do start breaking that low, then I'll zoom out to the weekly supports where we're looking at closer to these 484 lows. But for now, no signs of red flags at this moment. But of course, got to be cautious, right? So this can shift in like literally 2 days, right? Let's say Monday or Tuesday, right? We get a big red candle down, and another one, right? That's possible too, right? This trend line has been forming for since August, so breaking that maybe bring some volume in. Who knows? But usually the longer a pattern forms, the more volume it will be coming, and it will be more follow through. Don't really have a rising wedge pattern here. It's only 2 touches, so not really that valid. But we had one here that kind of broke bull above it, kind of just back to it again. But for now, we'll just say this is a visual guide, something like this. Maybe it'll come back up here, touch one more time this week for the resistance for this to become a valid trend line. For now, this one, the red one's not that valid, just for visual guides. Let's see if get some clues from looking at these mega cap techs to see if they are shaping on any red flags or not. Know where the cues are heading. All right, so Meta is okay, right? This green line that we drew together for the last couple of weeks has been holding. So yeah, no red flags. Bounce, 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 bounce 4 times. Another 4 times here in this week. And the only red flag for me is that we're not back above this kind of like purple structure. This is the last kind of support and structure along the way what we built. So once we broke down from it, we did back test it and act as resistance on Thursday, but we still haven't cracked through it. Cracked through this green line. This should have been an easy fill for the bears to at least come down to like this 538, have this range to even back test this. But bears didn't even, couldn't even back test the prior all-time high. So that shows me that bear it wasn't really there. They could probably a little bit tired after this move down. So if it consolidates a little bit sideways, then we break down, then that's significant. But for now, just resting. I would say it's neutral for Meta at this month, although it's pretty near. Yeah. So right now it's neutral for me for Meta. But if we start confirming crack through here, break through daily downtrends and back test all-time highs, then that's a little bit of a red flag. But if we start cracking back, above this purple box again, and we're probably going to come back up to test this all-time high again. So those 2 scenarios. So neutral from Meta, and Tesla is a lead bear lead bull, absolute lead bull. You can tell, right? We're pretty much back to 52 high again. Strong move up, small pullback, another strong move up, small pullback, another strong move up. So no signs of red flags for me. As long as it keeps forming bull flags. We did have a higher high right here, right? Higher high prior than this high, lacking follow through. I wouldn't say lacking follow through because this could just as easily tomorrow be like Monday be like this, but it's just an initial, little sign where we did make a higher high and kind of no follow through on the shorter term time frame at least. But on the longer term time frame, it's still okay, as long as it stays above this little sideways equilibrium that it formed, right? This is the last structure it formed. So if it starts cracking down here, then it might start to ship a little bit of red flag here because we did poke above and come back below, then that's red flags. For now, it's okay. As long as we hold above 330, it's no red flags for me. And Amazon. It did give back a lot. But yeah, I would say, but we still haven't confirmed a trend yet. So it's kind of like a big drop. So let's see on this bounce, can bears confirm daily downtrend? So we get a shallow bounce, come out here, curl a little bit, and then boom, break down from this green line, and probably come back to test this 188 zone. If we do break down bear, and if we broke bull, we're probably going to come up, try to fill this gap. But for now, we're just kind of back testing the prior all-time highs around these levels. So let's see if we bounce back from here. For now, I would say Amazon is neutral as well because we were in a daily uptrend, but it broke the pivots of those uptrends. So now it's in a neutral trend. So, but it's still okay, right? It's not, bulls are still happy, and there's no real structural damage as of yet. Right, this could just be a weekly consolidation and no red flags. And Google. So Google is the one that kind of is a bit of a red flag for me. I think I talked about this where if we don't crack through these levels, I talked about this last week, that we might form an equilibrium, like a tiny range. And ideally for bulls, you want to hold above this black line for that tiny range, but it looks like we cracked through it. And now we're just backtesting the point of control, which is this line of this lower structure, right? Came up to the higher structure here, couldn't get over it. You can see these two double top is pretty much the low of this all-time high structure. And right now, we're now back to this structure. So that's the red flag for me. Because we finally broke above it on some good earnings, and next thing you know, we got bad news again. And now we're below it. And you can see it looks like this yellow line, the 200-day moving average, is bouncing off of it. So it looks like it's still bouncing off of it. So yeah, let's see where this equilibrium low is going to form, because we have big moves up, big move down. Then it's probably going to tighten up to that equilibrium that I talked about. Especially if you just go to a weekly chart, it's very clear, right? Big move up, big move down, big move up, big move down, and maybe continue to tighten up. For bulls, right, definitely hold above this 200-day moving average. But if you start to crack below here, it's going to be a red flag. 162. It's going to be a volume gap here. So around 160. If you crack the 162, you're probably coming back to 158. Yeah, that would not be good. You can see Google already confirmed a daily downtrend here when we broke through this pivot 171, and that's the lower high right there. So Google, I would say it's a bear in terms of all these 7 mega cap decks. Yeah, so let's see if bulls can try to get back above 168. If they can get back above 168, then we may tighten up closer to this higher of this range. All right, let's look at Microsoft. Yeah, a whole lot of nothing here. All right, same thing. I talked about this one where there's no real edge here for me. 431 is the top. This 397 to 400 psychological support is going to be the bottom. And it's just going to play ping pong. So for now, and it's even ping ponging more like just literally sideways here, which doesn't make sense, right? QQQ is also doing the exact same thing. Kind of just going like completely sideways, not really doing that much this week. Although we did break above it a tiny bit, but not much fall through. So until Microsoft decides to pick a direction, we don't really have much of an edge here. There's no clear trend either. But for now, it's looking like it wants to tighten up a little bit too as well. You can see, right? All these points are higher lows, higher than the prior lows. And you can see these points are lower highs. So it's pretty much just tightening up. So at one point, it's going to get tighter and tighter and tighter, or something like this. And then sometime it'll break either way. And once it breaks either way, then we're back to this ping pong range, right? To see where it decides to break out of that extreme range. So first, break out of this range. Then we'll look for these wider ranges to break. But that'll take probably more than 1 week, probably multiple weeks before we see that. So for now, no edge, Microsoft, and it's neutral because it's sitting right in the middle. And Apple's literally same place as last week. A little bit higher, but same idea. As long as it's trading in this ascending triangle, daily just kind of grinding off of it. It's going to be continue trading here, right? And first resistance, break 231, and then break this 236 for all-time high for me. And if Apple does a rollover, right, then we'll get that kind of scenario where it kind of cues rollover as well. Because you can see it's kind of like in that grind up as well. So if Apple rolls over, we might get something like this. So we'll have to watch if it doesn't end up rolling over. But for now, there's no signs of that at this given moment. But it's getting very, very tight. literally the range is so small on Apple and Microsoft, right? You can see those. See the ranges have been trading this week. There's literally no range. So a lot of these guys are tightening up. So once they tighten enough, then we'll get a huge break. Then that's when we can trade with size and follow the trend. Yeah. So make sure to follow the trend. All right, let's take a look at NVIDIA. So NVIDIA beat its earnings, but this guy has been running quite a bit. So I'm probably expecting Wall Street was probably expecting in like an even stellar beat or whatever it is. And I think their guidance was okay. And then Wall Street probably expected even better guidance. So hence we did pop and drop. So we're still in pretty much in range. But I do see a rising wedge here, which is not a good sign. You can see right here, resistance and support here. Could just adjust this a little bit, something like that. I don't trade off of these lines, but this is a rising wedge pattern that's been forming since probably August. So if rising wedge is a higher high, lacking follow through. So it makes new highs. This is a higher high. So this makes new highs, and it's not, you can see it broke to a new high by a little bit, and then no follow through. Same thing right here. Higher high, break to a new high, no follow through. So if NVIDIA starts, breaking down from here, if we don't bounce around these levels and then we crack through here, starts to roll over, the first level I'm going to be looking at is this 137. 137 breaks. I'm looking down at closer to this 130. 130 to 128 zone, which is this key structure right here. Well, we have bounced off of it before, and it was prior resistance. And if that cracks through, then the market's probably down quite a bit, where we'll be looking down at closer to this 120 zone, around this prior structure, right? This level of battle zone where the bulls and bears battle quite a bit between here to chop around before deciding the bulls won. So those are the three levels I'm looking at if we do break bear. And by that time, market definitely broke bear as well on the Qs on that rising wedge. And if this does happen, and the semiconductor will also break bear, which is one of the weakest sector at the moment. So if we do bounce, then I'm looking back up at this red line, see if we can break this rising wedge. If we come back up again and it rejects again, then maybe even gets tighter and tighter. The tighter it gets, the bigger it will break. So we'll continue to watch this pattern to see if it ends up breaking either this week, next week, whenever it decides to break. But we'll be watching when it does. So yeah, so overall the market is still looking okay. No signs of red flags at this moment, but there are a lot of patterns like NVIDIA, Apple, Microsoft are getting really tight, right? So if they decide to all break in the same direction, market is probably going to do the same thing. So especially how much tech is weighted in the market. And yeah, I really don't. I don't want to say I don't know if this could just skyrocket into 180s. Who knows, right? Maybe there's one more leg up and then go like that, right? So we'll keep the chart. We don't want to predict too much, and we'll go one day at a time. But we want to be cautious because a lot of patterns are getting really tight, and if we do break bear, you want to be cautious of it. But for now, you still want to be a bull at this moment because there is no real reflex on the longer term time frame of the chart. But like I said, things could shift right away in just a couple of days and confirm trends, right? So just be cautious and follow the trend and continue to make sure you have stop losses and go from there. All right, I'll do the commodities update tomorrow. And if you guys learn anything, feel free to like, share, and subscribe. And check out my YouTube and Patreon links for one-on-ones. And if you learn more TA or more fundamental stuff, check that out. And I'll see you guys tomorrow for commodities. Have a great rest of you guys' weekend.